Welcome to the Ask Me How I Know show. I'm your host, Julie Holly, and I'm so excited you're here. Ask Me How I Know is the only podcast in the multifamily niche replicating what takes place outside the walls of a seminar. Remember when we used to get together like that? This is like the lobby where honest, unscripted conversations take place and transformation happens. We'll talk about practical problem solving in the multifamily niche as well as overcoming mental roadblocks. This episode is brought to you by 3 Keys Investments. 3 Keys Investments is dedicated to helping people like you, you, enter the multifamily investment space to build passive income and legacy wealth. If you haven't already subscribed and reviewed Ask Me How I Know, I'd be honored if you did. Thanks so much for joining me today, and now for our featured guest. Hey guys, welcome back to Ask Me How I Know. You've totally missed, and you know what, Barry, maybe I'm going to have to, air all of our pre-conversation
I'm good
because
with that.
the audience, right? The audience missed a lot of really good conversation and banter beforehand. But today we are so fortunate to have Barry joining us on Ask Me How I Know. Thanks, Barry, for coming on.
Oh, I'm excited. This is going to be awesome. Like you said, we've had a great conversation and we've been talking for a few minutes before we even got started. So no, it's been a lot of fun already. So
I know it's only going to get more fun.
yeah.
So, Barry, as I was looking at, I absolutely love your LinkedIn posts. Your LinkedIn posts, sometimes are laced with some sarcasm that literally I just laugh out loud, but they're always
I don't think many people get that. So it's funny. There's sometimes, particularly in comments, like I'll kind of throw some things out there that I always wonder if people even get. It's my sense of humor that's kind of unique to me, and I don't know how many other people get it or not. So
so obviously I have found myself laughing out loud, just like
that's
at
good to
the
hear.
level of sarcasm. Like, this is classic. This is fantastic.
I've got one person who gets me. My wife doesn't, but you do. So we're good.
I know. My husband, he is very sarcastic himself, and so.
Right.
And I have some brothers that were sarcastic. So I
actually saw an article once and it referenced that sarcasm is like a sign of intelligence. So I took that. That's kind of my sense of humor, is being more, not like spitefully sarcastic, but just like goofily sarcastic, for lack of a better way to put it.
Playful.
Yeah, playfully sarcastic. Supposedly it's a sign of intelligence. So I don't know.
Okay, I'm totally going with the sign of intelligence.
Exactly. I've been running with it. So
I know. I'm sure you probably tell your wife that all the time. Honey, I'm just showing my intelligence,
I don't think she buys it. But
that's fantastic. Well, when I was looking at what you've done and your history, we were talking about, you and I are both slashies, and a lot of people listening, they have already had one career, or they're in a W-2 career right now, and they're trying to transition into something different. Yep. And you did that. In fact, right. Dude, you went and got your full on, passed the bar exam. You're an attorney.
Right.
What?
Yeah. So no, did that for about 8 years. Practice law, as they said. I never got it quite right. So I practiced. So.
Practice makes perfect, right?
Yeah. So did that for about 8 years and then transitioned, as you say, I mean, it's, from legal practice, which is as conservative as it gets, to a commission-based sales position. And I've been doing that for almost 20 years now.
Do you like it?
It's like anything else. It's a job. I do. I enjoy it. It's great to just, nothing is the same. The people I deal with, every deal is different. So things I didn't like about the law practice, where everything was the same. It was just reviewing one lease after another. It was boring for me. It's not. There are people that love it. So there's perfect jobs for everybody. So yeah, it's just very different. It's exciting. A lot of things we were talking about again before even recording here. So it's very different, and get to meet a lot of very cool and awesome people like yourself in the business.
It really is fun how many awesome people you get to meet when you step into a new career, especially
right
when you're not in an office stuck reading case documents.
Yeah, exactly. Particularly nowadays. I mean, when I first started, I mean, back in 2001, there was no social media, there were no podcasts, there's no video, what we're doing now. So, I mean, that's all in the last probably decade. So that's even made it more so that, and frankly, I think it's something that's actually been, I'd say, a positive of the COVID, what we've had, but it is. I mean, I think the standpoint, you're in Idaho, I'm in Florida, but we're having a really cool, fun conversation. I'm seeing you, you're seeing me, and it's not quite the same as being face to face, but we're also not traveling thousands of miles, spending lots of money and everything else to do it. So I think it's actually pretty awesome byproduct of of COVID in reality, that these sort of calls have become much more the norm, much more acceptable, and we're all doing them, a lot more of them.
Yeah, and the other thing is that I think a lot of people would never have met. I don't know that I would have actually met you if it wasn't for
Agreed.
LinkedIn. So,
No, because of that, I mean, as far as LinkedIn, absolutely. I mean, there's probably is no other way we would have met. So, no, agreed. There's a lot of people like that. And we were dropping names with each other, some of which we knew each other, some of the same, some we don't, but we'll meet now. So, no, I mean, I agree with you. It's a great way to have met people across the country that would have never otherwise met. I mean, I met a ton of people, actually, several in Idaho, like yourself. That I wouldn't have known anybody in Idaho. I mean, it's an awesome state, but I didn't know anybody there.
shh, we're trying to keep this a quiet state.
I don't blame you. Yeah.
We're like, this is still a quiet place to live in the world.
So I don't think Boise is anymore. I think that secret is out. So, but maybe the rest of the state, it's not yet.
Yeah, the Boise scene is pretty hot. My cousins are involved in real estate down there in different capacities, and we were talking about that at one point, who's moving in. And the interesting thing, and I'm not sure if you're seeing this in, your scope of work, but you have all these people that prior to COVID were already taking their California money and working
Right.
remotely. They'd
Yeah.
already crossed that bridge and
Mhm.
they were taking that and going over to Boise and, hey, I can afford the house I want. I have some, they have mountains down there. They're just not like the mountains around me.
Yeah.
So I call them hills, but they really do
Right.
have mountains, but they have the lifestyle that they want.
I would think, but it's changing. I would think housing prices are going up. It's funny. I was talking with somebody last week even, and we were just talking about hot markets, and I brought up Boise. It's like, really, Boise? And I kind of referred to it as the Nashville of the mountain states, and that just because I mean, I think you had mentioned you were just recently in Nashville.
Yep.
I mean, it's just got over the last 10 to 15 years, it became the cool place for young people to live and go to. And Boise, for folks coming out of California, seems like, again, it's like the Nashville of the mountain region. It really seems to be that way. It's kind of got that vibe to it now.
Yeah, it does. And it's definitely a fun city to go hang out and play
Yeah.
around and everything. They
Whereas
do have
10 years ago, maybe even just 5 years ago, it's like only thing anybody ever thought of with Boise was obviously potatoes. I mean, nobody thought of anything else when it came to Boise, but now it's like one of the probably five trendiest, coolest cities to be moving to, which
it,
is
which is
crazy.
wild. So
Yeah.
little known fact is that after the last crash,
Mhm.
there was this investor. He's like an agent in the office that we were at. And he was, we were residential, but he would drive from where we lived in California to Boise, which was like an 8.5 hour drive.
Right.
And he would make that drive and he was already investing in the market.
That's great.
I'm thinking, now that I'm on this end of things, thinking, golly, he had it
Abs-
figured out.
Absolutely. No, I mean, I've got a number of investment groups I work with and developers in Florida and the Southeast that have been opening and looking to open offices in Boise. So no, absolutely. So somebody who was doing that 10 years ago, I mean, that really was ahead of the curve. And I bet they've done incredibly well.
Oh,
Yeah.
I am certain that all of those trips in his little car, that was
Yeah.
not a gas guzzler, his eco car. I'm sure that is paying off dividends. Huge.
Absolutely. Yeah. No, I would definitely think so.
So wait, let's talk about that. People leaving Fort Lauderdale for Boise. Like, is it getting too expensive there? What's their impetus to move?
No, not even moving, just frankly looking to opening satellite offices or
Okay.
looking to there because they're just honestly, I think that's probably a little bit behind the curve. I think they're hearing again what's happening up there and just wanting to get a part of that and looking to open offices. But there probably are still opportunities, but I don't think it's like your friend or your acquaintance that you mentioned did that a decade ago. I can't imagine those opportunities are out there quite as prevalently as they were because now you've got investors from all over the country that weren't there before. So I think there's probably a lot more competition for those deals.
A whole lot more competition.
Yeah.
And there's definitely a local club there.
Yeah.
Definitely harder market to break into and everything. Oh, geez. I am wondering, as you look at, I was
Mhm.
thinking that you have just such a special lens because of being an attorney. And okay, what do you do? I mean, I see sale lease back, I see net lease, I
Yeah.
see, give a brief explanation just so that, I mean,
What
I've
the hell
read
do I
it.
do every day?
Yeah, basically. Are you just sitting around? No kidding.
Yeah, so I just surf on LinkedIn and do podcasts and what have you. So no, I mean, so I sell single tenant properties all over the country. Like as you drive around, as we all drive around, unless you live in Manhattan, you see the Taco Bells and Panera Breads and the drugstores and all these single tenant properties. So we sell those all over the country, including done deals out in the mountains parts. Of closed deals in 43 states, and do a lot of, like you mentioned, sale leasebacks, which we're generally working with franchise operators, franchisees, assisting them in selling and then leasing back their real estate, so monetizing the real estate. So we do a lot of work, in that regard all over the country also.
It's such a different scope. So a lot of times people are so wrapped up in their multifamily asset class, that
Right.
they're not thinking about these other opportunities. And I love what you just said about, hey, if you have XYZ, you could actually end up leasing that out and then still holding up, maintaining the land.
Correct. Or controlling the real estate for 20, 30, 40 years as a tenant. So no, and it's funny you mentioned multifamily. I mean, I know we were talking before about passively investing and passive cash flow. And that's actually where we see a lot of our investors come out of multifamily, in fact. Because obviously multifamily, if you're the general partner, if you're the operating partner there, I mean, it's a lot of work in
It is.
multifamily. I mean, you're getting the calls, depending how big you are. I mean, you might be getting calls, my toilet stopped up, the lights aren't working. So it's kind of it's a lot of work to really own and manage a multifamily property. So we see a lot of folks that do that as a career. I mean, they do that for 20, 30, 40 years, but they get into their 60s, 70s, and whatever the age is, they realize, crap, I just don't want to do this the rest of my life. And what they'll do is they'll sell those multifamily projects, 1031 exchange into single tenant properties. So now they've gone from more management intensive properties to passive investments, owning a Taco Bell or owning these single tenant properties that are now truly triple net passive investments, and they just cash flow. And I used to say they go sit on the beach, go on cruises. Maybe again someday you'll do the cruise part of it, but so now we see a lot of that actually, where folks do make that transition from really management intensive investing in real estate to passive investing in real estate.
So that's interesting because as we were talking before we, recorded this part, we were talking about how so many people, myself included, went from, oh, I'm a single family investor to, okay, now I want to, switch asset classes and get up into the multifamily. So it's
Mhm.
almost like graduating yet again. And
You
here's
did
how
the same thing. You go from single family, which is really management intensive, and again, you're getting calls from your tenant, and there's a lot of work involved. So you make that transition to staying in residential, which is great, but yeah, kind of stepped up to multifamily, but went the passive route as a limited partner. So it's kind of the same sort of transition, just staying in multifamily. And then a lot of folks then maybe transition from that. Okay, let me dabble in retail passively, being these sort of single tenant type properties, or if you own those multifamily buildings and you're just fed up with that, and you don't want to be a passive investor in multifamily, you transition to these single tenant properties as a passive investment.
So then I'm wondering, and so I can just hear everybody asking, and you've
Right.
probably been hammered on this, like, oh no, the sky's falling. What's going to happen to retail, right?
Right, right. Well, I think you got to look at what you're investing in. I mean, there's some validity to that. I mean, retail. I mean, you can't open the paper without reading about, well, this company's going bankrupt and that company's going bankrupt and this company's store units, this operator's closing 200 units. So it's out there. I mean, I acknowledge that. I mean, we've got Amazon is only growing. So I think it's really important. And one of the things we do with the investors we work with is really looking at what is Amazon proof and what is a secure investment, what is growing. And a lot of those is in the restaurant sector, frankly. Again, I mentioned like the Taco Bells and those sort of operators that we're never going to buy our fast. When you have younger kids and I have kids, you're never going to buying your Happy Meal or buying your your burritos at Chipotle. That's Amazon's not going to be selling those.
Isn't it
So it's
going
looking
to
at
deliver it? The drone is
Sorry?
going to deliver it to my doorstep, right?
Right. So, but I mean, Uber Eats or DoorDash and all those will, but it's coming from an operator who's got a storefront. I mean, we're going to see more ghost kitchens, if you're familiar with that term, where it's kind of, what is a ghost
I've
kitchen?
never heard a ghost kitchen. Is it like, woo?
So it's Casper, the friendly ghost, is getting into the food service. So no, it's actually what it is. Are ghost kitchens, as we're seeing these kind of odd. Well, first of all, you've got some operators like Chili's is operating some either virtual kitchens or ghost kitchens, where it's kind of a concept within a concept. Like Chili's it's a concept called It's Just Wings, which you can only order online through DoorDash, I believe it is. But there's also others that are, you kind of get a group of brands that are operating together under one roof. And generally they're off the beaten path, not on retail corridors. It might be an industrial area. So it's lower rent, it's lower overhead, and it's strictly delivery. And they call them ghost kitchens. That's going to be something you're going to be reading about a lot in the restaurant sector over the next few years. And frankly, it's something I'm excited about.
Okay, I'm with you. I'm pretty excited because up where I live, we have one. Now we have like two, food trucks. But
Right.
back in California, people stop listening after they hear this. We were eating at food trucks before they were popular. We
That's
had
great.
some, little taco truck we'd go to that was not in the best part of town or anything. But
Right.
oh man, the food is so good. But if I could
That's
have
awesome.
that type of food, I don't care where it's prepared. Like
I just say that's, I mean, a ghost
Wow.
kitchen would that'd be a good way to compare it. It's kind of a conglomerate picture, like 5 different food trucks all under one roof. So like with your family, if you wanted the taco, you wanted Mexican for dinner, your husband wants Italian, your kids want a pizza, and one of your other kids wants Greek. So you find, you got this ghost kitchen that has all of these concepts, and you
Wow.
each get what you want, and it gets delivered to your door. So that's
Let's just
kind of
face
what a
it.
ghost kitchen is in reality.
Okay, so here's the reality. The reality of what you're saying is it's revolutionary.
Right.
It's as revolutionary as, when they changed the thermostat on cars so that it could be the his and hers. I'll never forget the car salesman pointing that out to me as like, yeah, see, you can have your temperature over here and he can have his. This is
Right.
eons ago. It's like the marriage saver. Like, dude,
Yep.
the temperature is not going to wreck my marriage, but I do like the feature. So
Of
this
course,
whole
then you have a thunderstorm going like between the two seats, which means the cold and the hot air merging. But no, it's a very cool concept, and I think we're just starting to see them these last year to 2 years, and they're not widespread at all yet. And again, what I think you're really going to see are these brands within a brand, like even Taco Bell or Wingstop or some of these others that have the storefront, but they also operate some other brands or other food within that storefront, and making it, whether it's delivery or pickup. So that's even the food sector side is really going through a pretty significant evolution. But from a consumer standpoint and even an operational standpoint, I think it's mostly quite positive.
That's really I love your positive energy. Because I figure the people that are focusing on the doom and gloom, your brain actually doesn't function well when you're focusing on negativity. It actually like closes off. And so you focus on positive and it just opens your brain to a whole bunch of opportunities.
Well, and I think also one thing to look at, I mean, so many of these brands that have failed this year and that are going to fail this year, or operators, they were failing pre-COVID anyway. I mean, Sears, Kmart, I mean, yeah, all these brands, some of them were simply over leveraged in reality, or they just got stale. They didn't evolve. So it's no surprise what's happening out there. I think it's presenting opportunities for the brands that are creative and are changing and are evolving, whether that's on the food side or just general retail. There are opportunities out there, but you got to be careful. I mean, there's no doubt about it. I mean, there are brands that are just not successful anymore, but that was happening, even back in the 80s, the 90s, the 70s. I mean, we had brands going out of business. That's not new, but the pace of change, it is accelerating.
It's not just because of COVID. What?
Exactly. So no, if anything, what COVID has done which is, I think, is actually a positive. You've got some of these brands that were probably going to take 5 years to implode upon themselves. Now it's happening in 6 months. So we're getting rid of some brands that were already stale and were dying. We're just doing it a whole lot quicker. So that's actually kind of a positive of it in reality.
That's exciting. It makes me think about the Great Recession and what happened with the automotive industry.
Right.
And, I mean, bailouts and everything aside, you just looked at the evolution that the cars, I mean, all of a sudden Ford started, upping their body styles and doing all sorts of
Right.
things. And so what you're saying is we're seeing that in this portion of commercial real estate. Like,
Absolutely. And it ushered in, that's a great example. Also ushered in brands like Tesla that I can't remember when they first came along, but they had opportunities come in to innovate and create, sexy, great looking cars that are totally new style with the electric, obviously. So we're going to see that in retail. You're going to see some exciting brands that come in and see opportunities. I mean, in the eyeglass sector, Warby Parker, who was a virtual, digital native brand only online. They've been opening stores in recent years, and they've now got cool eyeglass styles and things like that. So there are going to be brands along those lines, or Untuck It with with shirts that were strictly online, but then they've been opening stores. So you're seeing a lot of that type of evolution that now they can be able to go into stores that are vacated by brands that just couldn't cut it.
yeah, I will give a plug. Untuck It should give me like some affiliate link, but my husband got a couple Untuck It shirts this year and they're legit.
Right.
FYI, gentlemen. And they have a ladies line as well. My husband pointed that out. So,
Yeah. So no, it's a great example. So
oh, that's so cool. So let me ask you this.
sure.
What are some of the, as you look at from the attorney lens and from your current lens and you merge them together, like what are some of those dicey situations that people can avoid if they would just listen to someone like you?
I think from an acquisition standpoint, particularly for what I do, I think it's looking at just all aspects of a deal, whether that's, certainly the real estate, probably a lot of the same things you do when you're looking at investing in multifamily. I've done a lot of posts referring to the four legs of the table, where it's looking at the quality of the real estate, the tenant financials, how they performed at the stores, how are the store sales performing. So I think looking at the whole aspect of a deal and not just, well, it's a six cap or it's an eight cap or whatever it might be. So really just looking at the many aspects of a deal. And even a Taco Bell is an example. I mean, every Taco Bell is not the same because so many of them are, pretty much all of them are franchise. So how's this particular operator? What do their financials look like? What do the store sales look like at the particular location? So again, I think it's just looking at, kind of, I take like a macro to micro approach. So you're looking at globally, again, kind of like you would do in a multifamily project. How is the market? But then how is that, that exact, that location? How does that particular apartment building, how's that particular, Taco Bell perform? So I'm just taking a very broad approach to looking at a property and not just too narrow.
Yeah. Yeah. Well, it's easy to get pigeonholed into, everybody has a strength and weakness about them and they
Right.
can just focus in and zero in on the one thing that they want to look at,
Right.
one
Right.
of those love is blind type things. Like, no, no, no. Look at
And I
every
think
part of
also,
it.
I was saying, I think also, I think we were talking, it may have been before before this, may have been when we were offline a little bit, but talking about just the ideas, whether it's a mentor or just somebody to bounce ideas off of. So having that, if you're looking at a deal, whether that's just another investment partner, somebody you trust, it might be your attorney, it might be your accountant, just bouncing, I'm looking at this particular deal. What do you think? Or what are you seeing on here? It could be your, broker that you trust or whoever it might be. So I think that as well, just bouncing ideas and having somebody in the business that you really trust and just you trade ideas with in that regard is really important too.
It's so important. I have several people in my life that are like that, and it makes all the difference in the world, especially if they know exactly where you're investing. And
Right.
oh wow,
Yeah. I mean,
save
here are
me
these
from
mastermind groups. It could be something like that, a group of friends that you've met in the business. Absolutely.
yeah, a whole lot of them. What would you say with do you work with office space as well, or
No, I've really been focused strictly on the retail side. So, I mean, I keep up with the office sector. In fact, I did a post this morning on LinkedIn talking about with law firms and are they, with work from home, are they, what are we going to see in the office sector? So I keep an eye on it. But no, my focus really is on the retail side.
I did see that post and I was curious as to, where everybody would land on that.
Right.
Posts are always very thought provoking. So keep it up
I
because
appreciate it. Thanks so much. And likewise.
it's really, really super fun. Um, I always have my cheat sheet. Look how old school I am. Did you see that?
I got a pad sitting here right next to me as well. So no, absolutely.
I always have something written down, and then it's pretty fun. So we talked about where retail is headed.
Right.
What I'm wondering, if I'm really down to it,
Mhm.
is, does it ever crash and burn?
I don't think so. I
Have you
really don't think so.
Is
It's
Taco Bell just safe? Because
is what? I'm sorry.
is Taco Bell just safe? Because
I don't think it's interesting, and I've had this conversation with folks. I mean, where is retail going to be in 10 years? It's hard to know exactly. I mean, Amazon is growing significantly. Not to mention, you've got Walmart, you've got Target. One thing I've been really talking about online, and it's something I really believe in, is the retail sector. What we've kind of become right now. And I think we as a society really need to keep an eye on this. I think it's something we individually all need to look at is we've kind of gotten where our retail sector is. It's Amazon, it's Walmart, it's Target, it's Costco, it's Home Depot, it's Lowe's. And are we going to allow that to be it? And it's really, if we as consumers are only focused on buying something as quickly as I can, as easily as I can, to a degree, maybe as cheaply as I can. So we kind of just where everything we buy comes from one of those 5 or 6 retail establishments. I think what we're going to see is our economy is going to take a significant hit. I really believe, because we're going to have it where all the local retailers that we deal with, all the mom and pops in our economy that I really believe are kind of the backbone of our economy. If we make it where, as a collective, that we just go to those 5 or 6 retailers, we're going to look up in 5 or 10 years and realize, holy crap, where's everybody else? Where's that corner store? Where's that retailer that I used to go to that's had 100 locations? And we're going to realize, you know what? We all bought everything at Walmart, Target, and Costco and Amazon. None of them can make it. And if we allow that to happen, we're obviously going to look up one day and it's like, holy cow, why do we have 15% unemployment perpetually now? Well, because the retail sector is the backbone of our economy, and we all bought it, whatever was the easiest place to go. And that was always Walmart, Amazon, Target. So I think it's something we've got to really individually look at and decide to avoid that scenario, because I don't think retail is going away. I don't think retail is going to die. I think it's imperative to have the brick and mortar presence. It's very hard to have just strictly online. Even Amazon's opening stores. But I think that is something I think we've got to all, I haven't heard the mainstream media really talk about that. So it's something I've been talking about online, because I really do believe it's something we've got to look at. Otherwise, we're going to look at and realize that nobody else is around. That if you want to buy something now, the only place you can ever go is Amazon, Target, Costco, Walmart, Home Depot, Lowe's. And if that's really, really boring. I think I don't think that'd be a great scenario, but I think that's kind of where we're headed if we're not careful.
Interesting. So what would you propose as a solution? I mean, it seems pretty obvious, like, hey, everybody, make sure you support local and buy local. Is it
right?
Is there something
I think
more
it's
than
kind
that?
of that. I think it's so easy now, and I'm as guilty of this as anybody, where you've got to buy something and the default is, where is it cheapest, where is it easiest? And the answer to that is almost always going to be, again, do I just pull it up on my phone and go to Amazon? If I do that, do I just go drive real quick to Walmart or Target, or if it's something home improvement, Home Depot or Lowe's, as opposed to kind of looking out for what other alternatives are there? And I'm not against any of those companies, because they all hire a lot of people and employ significant numbers of people across our country as well. But that can't be the only thing. So you've got to be kind of stop and think a little bit, I think, when we need to buy something, and where are my other alternatives? Where can is there a local store I can go to? Is there, a mid-size retailer I can go to? What are my other options that beyond those, those big 3 or 4 retailers?
Right. It's interesting. I just had a little visitor pop in. I don't think
No
my daughter
problem.
realized I was recording. It's so cute. So here's maybe a way to expand on that a little bit. Is I could easily buy my vitamins. I love my vitamins. I could easily buy them on Amazon, and it would be, I think, $4 cheaper. And
Right.
hey, $4 is a coffee, people. Come on.
Yeah.
So, or a pint. I don't know. So, we
Yeah,
all have our
that'd be
vice.
more my thing. Yeah.
Right. So, I could do that. I could pop over onto Amazon for that. But in our small town, we have this little vitamin shop.
There you go.
And going to that vitamin shop, I mean, the woman there, she is just a wealth of knowledge. And I always tell her, I buy it here because I want to support you. You are giving me a service. You are giving me feedback as to, what vitamins would best suit for XYZ. She's giving me this wealth of information. It's a little bit of compensation for that. If we want to tip our baristas or tip our bartender, then a way of kind of tipping your local vitamin person or your local shop is shop local, pay the extra couple bucks.
Well, I think it's also, and you make a great example, it's on the retail sector and the retailers themselves, whether that's a local operator or a regional or even a national, is to provide that kind of service. They've got to be able, it can't just be buy here because we're cheaper or buy here because we're convenient, because you're never going to be more convenient than Amazon. It's just that simple. So they've got to provide that kind of service or provide something that's an experience that you can't get online. Maybe it's going to like TJ Maxx or Burlington, where it's kind of the treasure hunt aspect of it or component. So they've got to provide something that Amazon, Target, Walmart don't, those are, Amazon, Target, Walmart are all about where's it cheapest, where's it easy, you can come here and buy a lot of stuff. So it's on those retailers to really differentiate themselves in some way, whether it's experience, it's knowledge, it's information, it's service. And if they can't do that, those are gonna be the brands that don't make it. I mean, if it's just a mass merchant and it's just come to us because we're across the street, they're not going to survive in reality. So it's imperative at Vitamin Shop, they provide that level of service for you, because if it's just a store that sells vitamins and they never help you and they don't give you information, then you may as well save the $4.
I would absolutely save the $4 if there wasn't a reason. You're right. I would. I'd be like, Amazon, here I come. But I do get that every time. It is like you're saying. I mean, if you go into, even if I won't name out any stores, specifically, but you go into some stores and they don't know anything about the products that they are selling.
Right.
And the best you're going to do to educate yourself now is you went on to, Google, you searched it out. So I guess I'm kind of, dragging this out to definitely hear you. I hear you loud. Like these local establishments with people who have value, and have experience and knowledge and are willing to pass that on, definitely worth the extra and definitely a really important part.
I was saying, and even using Best Buy as an example, they were on the brink of death. And I think most people probably would have thought they were not going to survive going back, 5 to 10 years or so ago. I mean, Circuit City did not survive. You kind of thought the next one to go was Best Buy, but what they really focus on, first, they'll match prices with Amazon. So you don't have the price problem with the Best Buy versus Amazon, but you go in there, you've got people that aren't on commission. They're able to show you a lot of different options. You see it, you can kind of see it and touch it, feel it. They've kind of got the experiential component of it. So you've got that aspect of it. And that's what's distinguished Best Buy. I mean, certainly, to the real extreme, you've got Apple, that it's all about experience. So, Steve Jobs, when he first built the stores, he realized he wasn't trying to compete on price. I mean, he even acknowledged, we're not the cheapest at being Apple, but it was all about the experience and the cool factor and what makes them unique. So retailers have to kind of use that sort. Maybe you're not going to be the Apple store of whatever you do, but it kind of needs to be that sort of, what can you do to make yourself different that you can't get going on Amazon or going to Target or Walmart? And there's definitely opportunities out there. And there are brands that are doing it really well, like a Best Buy, and are succeeding. And there are plenty that frankly aren't, and they're not succeeding in reality, and they won't survive probably.
Do you suppose that I'm really thinking, I'm like, we need like a top 5 list, because everyone listening knows somebody that works either in the retail in some capacity, right? It's like, what's the top 5 list? Like, make sure you're knowledgeable and have something, make sure you provide an experience. Do you think that price matching is going to make that top 5 list? If I made a top 5 list, let's make one.
It might. Yeah. I mean, it might. That was one thing that Best Buy did pretty early too. I think they did that when they were first trying to survive. And it probably was, necessary. But that is also where like the TJ Maxx, the Burlington, where they don't need to price match because frankly you can't buy what they have necessarily because it is that treasure hunt component. So they probably don't really need to match prices with Amazon. But if you sell, it kind of becomes on what you sell. If you sell strictly a commodity where I can just go buy it quick and easy on Amazon, then you might have to. But if you're able to provide a real service and an not up experience, or you provide something like you did, like you mentioned with the vitamin store. I don't know that vitamin store needs to match prices because they're really providing a service. So when you come in, they're able to help you and help you with your health, if they save you time. So I think it just depends on what the product is. But some of them, yeah, they probably do need to have that as an aspect when you say of that top five. But interestingly, what I see is I think most folks when they go to Best Buy, I bet the percentage of folks that really check the price and get them to match it at Amazon is probably pretty small. So I think the more service they provide, the less likely the consumer is to think that I got to take advantage of that, and I've got to get them to match the price on Amazon. But at least they offer and it is there. I mean, Target does too. Or at least they used to. They were matching Amazon, but it sometimes becomes kind of a hassle. So I think a lot of people just don't bother with it. If I really got help and they help me, I'm not going to worry about pulling up on Amazon and taking 15 minutes to save the $3.
Right. Oh, that makes a lot of sense. There was a retail part that I was thinking of that was interesting. Well, I am curious. What would you recommend gravitating towards or staying away from?
As far as from an investment standpoint, or
if somebody wanted to make that upgrade, right? And they're at that point in life and they're like, I'm tired of multifamily and managing it and, being on the GP side. I want to roll this over into something with you, Barry.
Yeah, I mean, honestly, the first thing we talk about when we meet with prospective investors is looking at properties and brands that are Amazon proof. I mean, that's literally the first thing we talk about. So I think that's a critical aspect of it. I mean, you got to look at, you don't want to buy something that's just strictly competing with Amazon, or I do think eventually they're not going to make it. I mean, so we look at, food is a big area, particularly, fast food, quick service, probably more so than casual dining, because I think they've had some challenges, and certainly COVID's been some real challenges with casual sit-down dining. But food in general, I think, is a great area. And discount has been strong since the Great Recession. I mean, the dollar stores, Dollar General in particular, has done really well. So well-located dollar stores are great areas. And then also who's providing experience. I mean, honestly, I was kind of bullish on fitness was a great area to potentially be in. I don't know that necessarily single tenant, but something as part of a multi-tenant. They were bringing people in, and it was doing great leading up to this period. We never thought we'd see a pandemic quite like this. But I'd say those that are experience-based and certainly food-based that we'd be looking at, who's not exposed to Amazon in reality.
Yeah. Everybody in my neck of the woods. We're an hour and a half from a Target.
Oh wow. Okay.
we are 45 minutes from a Walmart, but there's a haul from our little small town. So everyone up here, utilizes online services.
What about grocery? How do you have a big grocery store nearby, or who's your local grocer?
Yeah. Not just one, but two ginormous. We have like this beautiful Safeway and a beautiful Super One. We have two huge grocery stores. It's really interesting.
What about Dollar General? Do you have any of the discount stores near you? Or?
We do. They just opened, and they opened during COVID. What is it? It is, and I've gone in. They've rebranded this store. It is it's a food store. Come on. Grocery outlet. That's what it is.
Okay.
So there's a grocery outlet also that opened up. And they made it clear when they opened in the community that they were opening they're not like the grocery outlets you knew from the past,
right.
And so I can see grocery outlet seems to have been going through a rebranding. Right. I don't think it's just their store. So
gotcha. Very cool.
Yeah. Interesting, right? Three opportunities absolutely. In a county of 10,000. Like, come on. That's pretty ridiculous.
What about country? That's there's a lot of great communities like that. Absolutely.
Yeah, I have to say, this has made me realize we've lived in this small town for almost 5 years, and it's made me realize small towns actually have a lot to offer.
Oh yeah, no, absolutely. I
It's
mean, quality. I
just
mean, certainly. I mean, quality of life being a big part of that.
huge part of
Yeah.
that. Okay, I have one more question for you because I want to honor your time, but just you brought up the gym, and
Mhm.
I was thinking about how many people, you couldn't buy any gym equipment during COVID. I don't know if it's still back ordered,
Right.
but everybody got their Peloton or
Yeah.
their weight sets. What do you think is going to happen to gyms?
I think they'll be back. I really do. I mean, I've talked with online and offline to a lot of people. If they're gym people, they really are excited to get back to the gym. I think a lot of that is a social component, being around people, maybe having your trainer or just again, seeing your buddies there. So I've talked to a lot of people that even those that bought the Peloton and bought the equipment that are excited and looking forward to getting back to the gym. It's going to be, I mean, been a really, really rough year for the gym sector and for fitness, and it's probably going to be several more months of extreme challenges. And there will be fallout. I mean, a 24-hour fitness declared bankruptcy, Gold's declared bankruptcy. So you're going to see units close. There's no doubt about it. You're going to see units, brands go away. But I do long term. I am bullish on the sector. I don't see a scenario where the fitness sector goes away or there are no gyms. I think we'll be back to it. I'm definitely a believer that this is a temporary thing we're dealing with COVID. I certainly anticipate and certainly hope that the rest of our lives we're not wearing masks around and afraid to be around people. So I think fitness will be back at once COVID is behind us here in the next, I don't know, is it 3 months, 6 months, 9 months, whatever it is. I mean, frankly, the gym I drive by near me has been a lot of cars in the parking lot for the last probably 30 to 45 days. So it seems like people are getting back to it. So long term, I do believe the fitness sector will survive and again thrive.
I think you're right. I'll admit, my husband and I are back at the gym, and I'm super happy to be back at the gym. But like you were saying, I was just wondering, is there effects of people owning their own equipment and not wanting to go? But like you said, it is a social and it's getting out. It's a new environment. I mean, if people are working at home and their families at home and their kids are schooling at home and they're exercising, if everything is at home, there's a little bit of stir crazy that can happen.
Exactly, there will be people. There's definitely going to be people that did buy it and enjoy having that. It's just easy, it's quick, and they just do their workout and they're done. So I mean, there's definitely we're going to see people that did belong to gyms before that will not go back to gyms. I don't think there's any question about that. But as you said, it's also if our kids are doing school at home now. I mean, so okay, we're going to eat at home every night. We're going to do our workouts at home. We're watching TV at home, so we're never going to go to the movies. If that's what it's all about going forward, I mean, that's going to be kind of a boring existence. I don't think that's going to be the case. We're going to be back going to movies. We're going to be back going to gyms. We're going to be back eating at restaurants. We're going to be back going to the malls and shopping. We're a social society and people. So I think we'll be back to that sooner than we probably realize.
I agree. I agree. Based off of what I saw in Nashville, although all the masks, that is their ordinance right now and everything. But I mean, people are out. People are out
Yeah.
enjoying themselves and living life.
Yeah.
So I'll get my microphone here. Barry, are there any gems that you would like to pass on? Any final parting gems for the listeners?
No, I think from a real estate standpoint or just overall.
Overall, mindset,
Uh,
real estate. This is
no,
your
I think just
lightning round.
yeah, no, I would say this almost, I guess, thing that come to mind is what we were just talking about, that I do believe we'll be past this. It's been a really challenging year for a lot of people, and I don't minimize. I mean, from a employment side, I mean, there's a lot of people that have really been hurting. I mean, genuinely hurting economically, socially, emotionally. It's been a miserable year for a lot of folks, and I do believe we will be past this hopefully far sooner than later, and employment will be back, restaurants will be open, the things we just talked about, so jobs will be back again. And I'm optimistic the folks that are really having a really hard time now will be back to where they're able to afford, and they're not at risk of I know you're involved in the multifamily sector. One of the things that's really been a challenge there has been talking about the eviction moratoriums. I mean, there's people that are, they literally, I mean, they can't pay their rent and they can't pay their utility bills. And fortunately, you and I are not in that position, but a lot of, many people are. And my hope is we'll be past that really soon, and those people will be kind of relatively comfortable again, and not at risk of feeling like, holy cow, I'm not gonna have a place to live, or I'm not gonna be able to pay the power bill. It's been a tough year, and I do, we all just need to hang in there, help each other, and get through this.
Preach it. I agree.
Yeah.
Help each other.
Yep.
Make sure you smile at each other. I
Exactly.
guess we can't really high five elbows, whatever.
Air high five. So no, it's been great talking with you, and I know we're gonna be talking further offline, and it's been really fun connecting with you here.
Likewise. Thank you so much. I love that. Again, I have like my notepad here. You know what? I just always do that for my own peace of mind. But like I said, these conversations always have their, it's always its own unique conversation. And I appreciate that. And so.
Absolutely. Well, thanks so much for your time.
Yeah. Have it.
Great visiting.
And wait, I'm sorry. One last thing. Where do you want people to connect up with you?
Probably easiest would be on LinkedIn. I'm pretty active on there. Just look for me, Barry Wolfe, with Marcus and Millichap on LinkedIn, and shoot me a DM, shoot me a note, give me a call. Happy to connect with anybody.
And follow his posts because they're really interesting. Like truly, they're really interesting. I like it.
Thanks so much.
All right, Barry, have a great afternoon.
Thanks so much for joining me for another episode of Ask Me How I Know. This episode was brought to you by 3 Keys Investments. They are dedicated to helping people like you, you, my awesome listeners, develop passive income and legacy wealth through multifamily investing. Feel free to check out their website, 3keysinvestments.com, to see if there is an offering that will help your portfolio grow and meet all of your needs. If you haven't already rated, reviewed, subscribed, liked, all of those bells and whistles, I would be absolutely honored if you would do that for Ask Me How I Know. Thanks again, and go make it a great day.